today, there was only one thing that I thought was very likely, and that is that the market would test the 60-minute moving average around 1085. I wasn't sure if we would go straight down there with follow-through selling from the sell-off into yesterday's close, or if we would trade up and then go down. First bar of the day, doji. After a big sell-off, I don't think it's a great signal bar for, especially when you have a spike and then a rounding over. This could be a channel. Okay, I didn't take this, and I would not take this. What about shorting below the bear bar? You got a tail. Could form a micro wedge, and that's what it did. So now we have a bull reversal bar and a spike and a possible channel. Room to the moving average. Yesterday was mostly a trading range, and we're still within that range. I think it's an okay scalp. Possible low of the day, but I don't think that's likely. You know, for the first reversal up from the sell-off, that would be unusual for this to be the low of the day. Good entry bar. Below here is a low 2 short. This is the low 1. That's the low 2. One tick false breakout of the top of the day, so it's a possible short. There will be sell stops below here because you have a spike down and a spike up on a small opening range. So traders will trade the breakout. Okay, the short's triggered. Okay, tails are a problem. At this point, you have to decide: do you put your stop above here, or do you keep your stop above the bear bar? Tough call. Okay, the market made it easy. Now you got a second entry long. The close is in the upper half of the bar, so it meets the minimum criteria for a reversal bar. Something of a 2-bar reversal here, bear body, bull body. You can go long there, you can go long here, or you can wait for a breakout pullback. Okay, what about shorting this? It's 2 pushes up near the moving average. I wouldn't short below that doji bar, especially after the market made a relatively large move up. I would buy a higher low though if it happens, and I would buy above this inside bar as the first pause, even though it's close to the moving average. And there's the breakout, little expanding triangle, up, down, up, down, up. Possible reversal, but you got trending lows and trending closes here, so I wouldn't short the first breakout. Okay, it is a wedge bear flag setup, but to me this is too much momentum up. It's holding above the moving average. I wouldn't short it. I think it's more likely to have a failed reversal. In other words, a failed failure. So the failed breakout will turn down, but I don't think it'll go down far, and I think that failure will fail and result in a breakout pullback long. I know, I'm sorry about the language. Okay, now you got 3 or 4 pushes up. 1, 2, 3, 4. Again, possible wedge bear flag, but too much upward momentum. So possible spike here. This breakout could be a spike leading to a channel. Anytime you see a spike, you always have to think about that. The market broke to the upside, broke to the downside, broke again to the upside. So on a small opening range, I think there's a pretty good chance that the market will run. It trapped bulls here, it trapped bears here. So this is another attempt to go up, and the momentum up is pretty good, so I'm only looking to buy. Okay, 2 legs down, 1, 2. As I said, I wouldn't short this. Buying above this, not great, but still it's 2 legs down and a breakout pullback, so it's possible. This makes it better. You got a bull inside bar. You could buy above the bull bar, pull back to the moving average, or buy above the bear bar. 2 ticks lower, I just bought above the bull bar, and I'm still scalping mode. Okay, still possible wedge, 1 or 1, 2, 3. What about shorting below this? The momentum is up a little sharp here, and the market's going sideways. Whenever the market goes up sharply and then sideways, I don't look to short. I expect that there will be more up. Okay, good looking possible 2-bar reversal, but it's so sideways that I think it's a mistake to be shorting this far down from the high. Trapped the bears and reversed up. Good looking bar, a little far above the moving average, but it's probably okay. Okay, good looking bar. 3 pushes up here. So if it's a spike in a channel, 3 pushes up often leads to a pullback in the channel. bear inside bar. You short it. With these two strong bars, I wouldn't short it. I would wait for the breakout and then see if there's a lower high or a higher high pullback, and then maybe short that. But I'm not going to short. Channels can go up a long way, and they can trap bears in all along the way, and they can force bulls to buy at the top of the channel all along the way. And both traders are doing the exact opposite of the institutions. The institutions are buying below the lows of every bar, and they're shorting or taking profits above the high of every spike. So, if you're going to be doing anything, you have to do what the institutions are doing, not the opposite of what they are doing. Okay, another good-looking bull reversal bar, possible failed wedge, test of the moving average. It's a little risky to buy at the top of the channel, but it's a pretty good-looking bar. Okay, breakout, two good bars now. Decent follow-through, so there's probably going to be more up. I certainly wouldn't be shorting this. And what about buying above it as a breakout pullback? It broke out above the wedge top, pulled back. It should be more up. I think it's getting risky to buy up here, especially since the odds are high that the market's going to test down to 1085 today. I would be careful. The low of the day is a tick above yesterday's low. The market might be testing yesterday's high and become an inside day. Okay, another breakout pullback long with a doji. I didn't take that. Possible 5-tick failure. Okay, testing the high of the day, missed it by a couple ticks. We missed the low of the day by 1 tick. This is 3 pushes up in the channel, another spike. This could be the high of the day for that test down to 85. Not a good looking signal bar. If you want, you can wait for a breakout pullback. There almost certainly will be one. Channels usually end by climaxes like this in reversals, or they end by going sideways and then down. Okay, a couple good looking down bars. Okay, it's a biclimax, a spike in a channel. It should test down. Here's the spike, could test to here. Here's the spike, could test to this area. Here's a spike, could test to here. But all day long I kept saying that I thought the odds were good, that pretty high odds, 70% or better, that it would test down to the 60-minute moving average today. And if not today, then like 90% or 80% tomorrow. Anyway, anytime you have any kind of climactic pattern, like a tight channel that goes on for a long time, it's usually followed by at least 2 legs in the opposite direction, and they should be proportional. The number of bars in the legs should be proportional to the number of bars in the channel. And so I wouldn't say these 2 legs down, these 2 bars down constitute the first leg, and then a pause, and then 1 bar down the second leg. This is not a 2-legged move for a channel that has lasted this long. So this is probably the first leg. Okay, technically that's a high too long, down, up, but to me the market will probably form a lower high. Okay, tight trading range in here. Possible lower high short, wedge bear flag, 1 push up here, 2nd push up here, 3rd push up here. Possible lower high after a trend line break on a day when you think the odds are good. The market's coming down here, so it's a possible swing short. The stop is above the top of the wedge. The wedge triggered and tested the top of the wedge exactly. We had that report, but the market just started working its way down. Then we went into an extended sideways period here. Second entry long, I wouldn't take it. I think the market has more down, has a breakout here. It may have some kind of channel down. This is interesting. Got possible wedge bear flag, up, down, up, pause, up, breakout test here. This is the break-even stops. To me, I'm just going to wait.